Hi there, traders. This is Brad Gilbert with today's trading action. All right, now we're in the middle of the Asian session, almost. Right now, just having a look at the markets. You know what? The market's been caught out here, me included. Right, the dollar is still racing to the top side, which basically means no one is long dollars. Right, that's why it keeps going and going and going and going. That's the whole squeeze. Right, so like looking at this, we've got to start to get a really objective about this, right? Because the dollar could just keep going and going and going. It's almost like a little bit of common sense. You're like, well, okay, this has gone as far as it can, or has it? Right? That's what I'm sort of getting to. I'm like, you know what, we're going to sort of push back our subjective view sometimes and go, well, the dollar is acting like it's going to run to the moon, right? That's where we are. So what we have got, right, and you can see the recent moves. Now, this is where a bit of common sense comes in, right? The moves that we saw yesterday, okay, we saw dollar strength, everything sort of rallied, 50 odd points. Not like it's going mental, but it's enough to sort of upset the apple cart. Now, we did have the economic numbers. Let me just come back here and give you a look at the calendar because, you know, this is what I was sort of getting to yesterday with the European update. Basically, when you look at the numbers right now, it's basically we're trading the numbers. You're trading the outcome, and you know what? You get your 30 to 50 points and you just lock the cash in because the market is at a position where there's very few positions in the market, right? Still left in the market. So what happens is when the data comes out, the market sort of rushes into it, right? Whether it's strong or weak. And that is going to apply again today, right? It's taken all week for us to get some US numbers. So keep an eye on the GDP for Canada. Like the dollar against the CAD is, I'll show you that in a second, is a little bit skewed, right? We've got dollar CAD going through the roof and oil rallying. That's a mismatch. So either oil's got to fall or dollar CAD's got to come back. To me, more often than not, it's the dollar CAD that actually comes back, that corrects. Now, today, once again, we have a situation, right, where the economic numbers, it's a trading event. And what I say by that is don't think about the long term trend. This is where the market is really sort of repositioning for inflation. And you can sort of trade the event. Now, depending on the level of variance, right, the actual numbers here, if they're massively variant, well, then that's when we need to pay attention, right? And if you come back down here and have a look at the live signals, right, there's, dollar yen and Kiwi, right? Dollar yen's going up and Kiwi's going down. You're like, where are the rest of the majors? Well, they are sort of in limbo. And this is why the market is moving and just staying still because the rest of the major currency pairs, right, it's very uncertain because everyone's sort of like wondering is this dollar move going to last or not? And that's sort of where everything is. Now, I've been saying this all week, and I'll tell you what, this is like a little bit of a painful thing I've been doing every day, right? Just to sort of keep track of it. I've been saying to everyone, the euro crosses is where the action is. Euro Aussie, Euro Sterling, Euro Kiwi. In particular, Euro Aussie, but more so Euro Kiwi after those Kiwi GDP numbers. Now, I mentioned this on Monday. I was actually going to play golf with a couple of guys and I sort of ran out of time. Had a couple of minutes or 5 minutes to get down to the golf course, which is pretty close. And I got up the platform. I thought I'll do it when I get back. What I was looking to do is get long Euro Kiwi, right? And this is something, it's a bit of a lesson, is why I'm sort of showing you this. Because I'm like, okay, well, I can come back. What's the chance of Euro Kiwi, right, really shooting up too far before I get back? And Euro Kiwi was around 20030, 30.35 when it broke through. By the time I got back a few hours later, right, it was up like about 80 or 90 points. I'm like, well, I've missed it, right? But it's not going to go too far. Well, in actual fact, it's up 200 points, right, on the week. Now, would I have held it that long? I don't know. But I tell you what, it's a little bit of a reminder to when you see an opportunity, especially when the fundamentals line up, like inflation or GDP numbers, like that impact on the Kiwi, right? Has actually been behaving quite solid through this whole week, right? You only need one good trade a week. 10 lots on that, that's 20,000 Kiwi, right? It's about or 12,000 US. That is a pain in the ass that I have to endure because you know what? I just didn't give it the respect, went and played golf instead of actually putting the trade on, and it took off very quickly. So, two things. Don't underestimate the move. Don't underestimate how far it can go in the course of an hour and two when it comes from an oversold situation and ricochets back into the range, right? Because if you miss a trade like that, you know, I've got enough experience to sort of switch off and not to chase it or not to chase other instruments. But this week has been one of those funny ones because we've seen dollar strength, right? And this is the other thing. This is why everyone, like the US yields are up like 0.01, right? These yields aren't going up like the dollar should be rallying, right? That's why the data, trade the data, because right now, that's all we've got to work with. Look at euro and sterling. I mean, these things aren't up much. They're up somewhere between, 5 or 10, 15 points tops. But the Antipodeans, it's a risk off day, right? And you can see that very clearly, right? Equities are going down. And if you were trading the risk off day, sorry, you'd probably be expecting to sell euro and sterling, but we're not. We're selling Aussie and Kiwi. And on top of that, this is the other tricky thing. We've got Trump coming out with a whole bunch of extra tariff talk. Tariff. We're going to tariff this. We're going to tariff that. There's a whole heap of things. And dollar holds gains as attention turns to spending data for Fed clues, right? Well, there's been no change in the Fed, right, in anything. As I said to you then, the interest rate yields are pretty going sideways, right? So there's nothing really happening there. It's the media. They need to sort of generate stories. So today, keep a very close eye on the economic numbers, right, that are coming out, the PCE price index numbers. Strong numbers, the dollar's going to rally further. Weaker numbers, we might see a bigger move too. And if the numbers come out weak, as in like really weak, then what we want to be looking for is, you got the core numbers and the price index numbers there. So 2.5 to 2.8, 2.5 to 3.2 for the core numbers. Now, if those numbers came out much weaker, well, then we're going to see an explosive move on euro to the top side on euro, sterling, Aussie, Kiwi, right? And dollar Swiss will be down. If we get a stronger number, well, I don't think it's going to be as explosive because it'll just keep going up just on what people are getting in and out of, right? So just keep an eye on this. This is a valid trade the number opportunity, right? That's what I can see. And sorry, just looking at the CAD, right? I meant to show you this before. Let's just have a look at this mismatch because this is where, you see some disparity, like dollar CAD shooting topside and oil is rallying aggressively, right? Well, reasonably aggressively. It's up a couple of bucks. But more often than not, it's dollar CAD that goes down and catches up with oil, right? So just keep an eye on that as you're going forward as well, especially if you're in that North American session because we do have the CAD GDP numbers, all right? So plenty to look at, lots of learning. Don't miss the opportunity when it comes. As I said, for those stable and compliant traders, trading those economic numbers may be a little bit tricky, right? So if you're not confident, do not get involved. You want to be using T-Rex as your main tool. And the other good thing about where the market is now, we have new resistance trend lines, right? This makes it easier to trade those events. So euro, sterling, Aussie, Kiwi on the top side, and we've got support levels here, dollar index, dollar Swiss, dollar yen. I don't think dollar yen's doing anything, and also dollar CAD, right? So even if we don't get it this week, there's going to be a flush out. There's going to be a change in the dollar sentiment here at some point, and we have clear levels to get in, low risk levels, right? So if you haven't been doing much, just hang on. The good times are just around the corner. All right, guys, have a good one. All the best. Cheerio.